There is going to be an impact on the U.S. economy, which will build with time. In our judgment, it will be negative on the U.S. economy. That will have an impact on us. But the series of measures will directly affect millions of Canadians.
The markets are in free fall, people's pension plans are at risk, and nobody really understands what the heck is going on right now with all these tariffs, and the uncertainty is just really showing in the market here. So let's get first to the Canadian dollar, because this is kind of insane, and it's not just the Canadian dollar. So you've got the Canadian dollar that's up 1.43%. This is a daily chart. It's really staging a comeback right now from the lows, and this actual low down here where you can see it basically wick down, that was when Donald Trump came out and sort of reversed a little bit on the 25% tariffs on Canada. But since then, you know, it's tried to go down again, but it's finally broke out of this range that it's been trading in, and you know, it's been in this range since December 2024. So very interesting what's going on, and it's not just the Canadian dollar. Take a look at the pound. That is absolutely surging. It's stronger than the Canadian dollar. Obviously, economic prospects, maybe the market thinks are better in the UK. And then you've got the euro that is also surging. And right now, it's up 2.42%. That is a huge move in the euro. And you've also got some other really strange moves in the market. So with that happening, you've got people shifting into bonds, which is typically a fear thing. So you've got gold, which is real money. That's actually down against the Canadian dollar, nearly 2%, a massive down day against the Canadian dollar. So real money versus currency there, and it's starting to top out. But you can see on this insane run that gold has been on. In fact, if we measure it out right now, you can see that from the lows down here in October 2023, gold is up 82.54%. So even if it drops 20% from here, gold is still up massively and will maintain its long-term trajectory with everything that's going on. You got gold to the pound down. You've got gold to the dollar down only off 0.5%. So very interesting. Then you've got the fear trade that is going on with oil. And again, if you pop this chart out, this is a daily chart. You're going down to the lows in 2023 here, and also what we saw in September 2024 last year when there was a market sell-off, and we're going down to those lows of November 2021. So it's very, very interesting. Oil is really tanking right now. This is a huge day for oil, down 6.37%, which obviously means recession. And obviously Canada, we know, is already in a recession. That's why the Canadian dollar's at 71 cents right now and not 77, 78 cents. Because if you put it into context, actually, with the pound, for instance, you know, the pound is heading to the highest levels since 2022, and so is the euro, whereas the Canadian dollar, you know, it's nowhere near the highs. It's absolutely miles away. So you have to put it into context there as well. And now I want to show you what's going on with the TSX. It is down over 3%. So this is a lot of bank stocks, obviously, that are weighted in here. So the TSX being down, not a good sign. You've got the DAX that is down now over 3%. You've got the Dow that is down 2.66%. You've got the NASDAQ off over 2%. The S&P down over 2%. So it's absolutely crazy, the moves that you're seeing in markets. If you look at the bond market in Canada, heading down to the lows here, it's 2.51%. Very interesting jobs report that is coming out tomorrow. So this could disrupt the Canadian dollar, because this could be a big jobs report, a very negative jobs report. So we'll see what happens with that tomorrow, but it's going to be very interesting. And the dollar index is tanking right now, but still, it's really up. If you look at where the dollar index has come in the year, it's still really up here, and you can see it's going down to the lows of September 2024, but still, it is very, very high and puts a lot of pressure. So obviously, you've got that going on. You have to remember that pension funds like CPP, and most pension funds, in fact, they're invested heavily in these Mag 7 stocks, which are currently just taking a massive beating hitting. So obviously a lot of these pension funds follow the bubble, and you can see it right here with CPP's top 100 holdings, Nvidia, Apple, Microsoft. And if we go and look at some of those today, let's see what they're doing. So let's take a look at Nvidia here and see what is going on with Nvidia. That's down 7%, but look, it's majorly down since the highs here. It is off a lot. And if we take a look at Apple here, we can see what's going on with them. Wow, Apple is down 8.68%. So a big drop. You can see these drops are actually huge. From the highs here, you're looking at a drop of over 21%. So they're all entering a bear market right now, which is not good. And then you basically got the Canadian factory PMI hits a 15-month low on expanding trade war. Again, this is kind of something that you would expect would happen. But you've also got layoffs that are basically happening across the board now in the US and Canada because, quite frankly, it's an impossible environment to deal with. And you're going to need tens of thousands of custom brokers and people working for the government to actually do all these tariffs, because it is going to be a massive expansion on government because of how complicated it is. You've only got to look at George Gammon's tweet on that. If you look at Canada consumer confidence, historically, it's in the toilet right now. Obviously, the United States consumer confidence is down right now as well. So a lot of what we're seeing, I think, is adjustments that the market is making based on the fact the US economy was the most resilient economy in the world, and it's now just imploding on itself. And it's really just the tariffs were the pin that popped the bubble. You can't blame this entirely on the tariffs, even though you know central planners like Mark Carney, that's exactly what they're going to do. Take a listen to this.
President Trump has just announced a series of measures that are going to fundamentally change the international trading system. Now, in doing so, he has preserved a number of important elements of our relationship, the commercial relationship between Canada and the United States. But the fentanyl tariffs still remain in place, as do the tariffs for steel and aluminum. As of this evening, the tariffs on automobiles will enter into force, and the U.S. has signaled that there will be additional tariffs in so-called strategic sectors, pharmaceuticals, lumber, and semiconductors. So we're in a situation where there is going to be an impact on the U.S. economy, which will build with time. In our judgment, it will be negative on the U.S. economy. That will have an impact on us. But the series of measures will directly affect millions of Canadians. We're going to fight.
So there you go. He puts it bluntly there and says how many people this is going to affect, which is millions, which is what we've been saying on this channel the whole time. This is going to have far-reaching consequences. There's going to be lots of unintended consequences that people didn't even realize. And obviously the risk of a black swan event happening is skyrocketing right now. But that dollar going down is signaling, at least right now, there isn't one that is imminent. So very interesting, and we'll have to keep our eye on the dollar. And now I want to show you what Melanie Joly said.
We didn't launch a trade war against the U.S. The U.S. Decided to put 25% tariffs against all our products in their first executive order, then went after us by putting 25% tariffs on our steel and aluminum, then went after us putting 25% on our auto sector, and now we're looking at potentially...
So there you go. I mean, it's obvious by what they're saying that even they don't have a clue what's going on, which is kind of unsurprising for the Liberal government. But she said there that it was 25% tariffs on everything, then it was 25% tariffs on steel and aluminum, then it was 25% tariffs on auto. But if it was 25% tariffs on everything, then surely that's everything. But even they don't really understand what they're on about. And it's just turned into this just hate America, hate Trump, hate everything about America type environment that we're in right now. This buy Canadian, buy American is so dumb. It really is, because you're making yourself poor if you do that by limiting the amount of goods and services that you have access to, and also by paying selling more because you're going to be paying more, let's face it. But yeah, I think the main theme here is that, you know, two things are happening here that Trump wanted, and you have to bear that in mind. Whether you hate Trump or love him, he's getting lower interest rates right now because bond yields are falling, and he's also getting a lower dollar right now as the dollar is falling. How long that lasts for is kind of unclear at this moment. But also, tariffs are just a terrible economic policy. Now, as a negotiating tactic, you can kind of see how it might leverage getting better trade deals for the United States, but actually implementing them and doing it in such a sweeping manner is just completely insane. And that is why right now the markets are falling out of bed, because they don't have a clue how to interpret this, and it is going to have wide-reaching consequences. And anytime the market sniffs out a lot of uncertainty, that is the thing that the market hates. But what President Trump doesn't really realize, or probably doesn't know, is that a lot of Americans, a lot of Canadians' retirements, a lot of people around the world have invested heavy into the United States through the stock market, using that as a vehicle for it. And basically, with the stock market selling off right now, that doesn't make it appealing to go and invest more money into the United States. In fact, more people are likely to take money out, especially when you've got nationalistic policies encouraging you to invest locally. So how all this plays out is unclear right now, but let's hope these tariffs get reversed at some point. But anyway, guys, I really want to thank you for watching this video. If you've enjoyed this video, please check out that video up there, and I will see you in the next one. Take care, guys. Bye-bye.